All right, today we're diving into one of the wildest business stories of the year. We're talking about Netflix's massive billion-dollar breakup. And get this, it's a story where losing actually meant winning, and walking away from the deal, well, that turned out to be the smartest thing they could have done. Okay, so picture this. It's February 27th, 2026. Something is happening on Wall Street that it makes no sense. Netflix, the absolute king of streaming, just lost a huge bidding war. They failed to buy the legendary Warner Bros. Studio. So what does the market do? Panic? Nope. It celebrates. The stock just goes through the roof. So that's the big question we're tackling today, right? How in the world is losing an $83 billion deal a massive win for a company? It flies in the face of everything we think we know about business. To really get to the bottom of this, we first have to understand the whole backstory behind this bizarre event, which we're calling the paradoxical pop. So here's how it all went down. Things really kicked off back in December of 2025. Netflix agrees to buy Warner Bros., right? The price is about $27.75 a share. But hold on, it's not that simple. A rival, Paramount Skydance, swoops in and starts a hostile takeover. They're driving the price up. Fast forward to late February 26, and bam, Paramount tables an all-cash offer of $31 a share. All eyes are on Netflix. Everyone's waiting for the counteroffer. And what do? They just walk away. Game over. So that begs the question, why was Netflix even in this dogfight in the first place? What was so incredibly tempting about this deal? Let's take a look. You gotta understand, this wasn't just any company. The temptation was huge. We're talking about Warner's crown jewels here. This isn't just a movie studio. It's basically a library of our entire culture. You've got HBO, the place for prestige TV. You've got DC Studios with all the superheroes, CNN, a global news powerhouse. And on top of that, 100 years of classic movies and shows, plus studios all over the world. I mean, for a company like Netflix that lives and breathes content, this was the ultimate prize. But here's the thing, and this analogy just hits it perfectly. Think about Netflix. It's like a sleek, modern, smart apartment. Everything works perfectly, it's efficient, it runs itself. Buying Warner Bros.? That's like buying a massive 100-year-old mansion. Yeah, it's gorgeous, full of history, but it also comes with old pipes, a roof that might leak, and it needs a ton of expensive, complicated upkeep. See the problem? And that sets the stage perfectly for the other side of the coin, because the cost of actually winning this fight was starting to look, well, pretty scary to investors. Which brings us to the price of victory. Okay, so Wall Street was starting to get really nervous, and it basically boiled down to four big worries. First up, the debt. We're talking about an $83 billion deal that would have buried Netflix in debt. Second, you have the integration risk. I mean, trying to smash together an old-school media giant with a fast-moving tech company, that's a recipe for disaster. Then you've got the regulators. You just knew this deal would get stuck in antitrust investigations for years. And lastly, just the pure distraction. You'd have all the top people at Netflix focused on this messy merger instead of their own booming business. And then we got this quote straight from Netflix's co-CEOs, and it was a total aha moment. What they were saying, crucially, wasn't we lost. It was we won on our own terms. They basically said this was never a must-have deal. It was a nice-to-have, but only if the price was right. And once that price got too high, they were out. Simple as that. And what Netflix showed everyone is something investors absolutely love to see. It's called capital discipline. Really, it's just a fancy way of saying they didn't let their ego get in the way. They didn't get sucked into a win-at-all-costs bidding war. They had their price, they stuck to it, and they were confident enough to say, you know what? Let someone else overpay. That kind of discipline is exactly why the stock jumped. So with all that merger uncertainty gone, Wall Street could finally take a step back and see Netflix for what it was, a total powerhouse, all on its own. Let's look at Netflix, untangled from this whole mess. First off, just look at the sheer size of this thing. By the end of 2025, we're talking about over 325 million paying subscribers. I mean, that is just a staggering global audience. And then there's the new kid on the block, their ad business. It was absolutely on fire, projected to double and rake in another $3 billion in 2026. That's a huge new revenue stream. And here's the kicker. It wasn't just about getting bigger. It was about getting more profitable. They were shooting for an operating margin of 31.5%. This company is a lean, mean, money-making machine. And the proof was right there in the numbers. I mean, this chart just says it all. Look at their Q4 results compared to the year before. Revenue up 18%. Operating income up a whopping 30%, and earnings per share up 31%. The data was practically screaming at Wall Street, hey, we don't need this risky deal. We're already killing it. So the deal is off the table. Now what? Well, the sources basically lay out three possible paths forward for Netflix. Let's break down these three futures. Okay, so what could happen next? There are basically three ways this could play out. Scenario one is the bull case. The whole merger mess is over, the market breathes a sigh of relief, focuses on how strong Netflix's actual business is, and the stock shoots back up. Then you have the base case, which is probably the most likely. Netflix just keeps doing what it's doing, growing revenue by about 14% and hitting their profit goals. No drama. And finally, there's the bear case. Paramount and Warner actually pull off their merger, they become a really tough competitor, and that slows Netflix down a bit. But here's the key. Even in the worst-case scenario, Netflix's core business is still a beast. So it all comes down to this one final thought, doesn't it? We live in a world that is just obsessed with winning, with growing, with acquiring things at any cost. But maybe, just maybe, the real sign of strength is knowing when to stop, knowing your own worth and having the guts to just walk away. It makes you wonder, right? Is the best deal you can ever make the one you don't?